Do 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 do. All right, hang on. Hang on, everybody. I got to get the link. I got to share it. Okay, I got the link. Okay, got the link. Let me get the link to share it with you. Click, double click, copy. All right, almost there. Everybody wait. All right, so I think this is going to work. We had trouble with the other webinar room. So let's see how this is. Let me spread my wings so I can see the chat on this page. I think I'm going to kill the webcam. Yeah, it looks like it's frozen anyways. Video capture. Deactivate. All right. All right, so hopefully this will work. If not, we'll try plan C for the morning, but fingers crossed. Just in case you can hear me, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. I'm doing this webinar with the overriding goal of helping you, first and foremost, make successful trade plans for today. However, there's also an overriding goal of helping you become successful in general as a currency trader. So Traders Way wants you to survive first and then be able to thrive in the long run. And if I'm able to help you do that, then perhaps I earn your loyalty and respect. And if that is the case, you'll probably choose Traders Way to become your prime broker. So that's the wonderful plan on how to take over the world, make the world a better place. Okay, video's a little slow. I'm doing something right now to fix that. All right, so anyways, we've had a very interesting 2 or 3 days worth of trading. Volatility has returned. Even my neighbor at a recent party said, hey, the markets. I'm like, yeah, well, this is the time of year when typically something unexpected happens and volatility returns. And very often it's simply that we lack volatility because most professional traders were on holidays, and then we gain volatility because those traders on vacation return home from vacation, and bada bing, bada boom. So it's you never know what it is, but there's always going to be something. So anyways, the world's freaking out about Turkey. There shouldn't be any contagion to it, so we'll see what happens on the long run. All right, so going back to what we should be doing here, we talked about this yesterday. We were in a situation where Aussie yen had fallen very aggressively, and that a falling Aussie, and a strengthening yen is indicative of risk off. Okay. And so if you were a bull, the thing we were talking about yesterday is, well, your job is to sit around waiting for something bullish to happen. And then we kind of lined this up and trapped it. And you can look for a breakout, a pullback, which we had on a micro level. And this is sort of more a micro level here, a little bit more macro here. We could have bought the dip to the roll reversal, which is also a very standard thing to do in trading. Now, the first one was the breakout pullback on this time frame. Okay, you could see that would have occurred if you're day trading. And then the next one would have been London Open. And, you know, sure, it didn't break out, but you wouldn't have known that down in here. So if you were a bull, the breakout, the pullback to this area would have been a buy for a bull. A little bit scary because it's fallen so far, but perhaps potentially an opportunity nonetheless. Now, bears, you can see I sort of had this area here. I lined that up yesterday while we were still down here as a potential place to sell, and that a little further up would have been even better. So it's really kind of this area. And even though I don't see it now, I'm not sure why we don't see it now. I must have got distracted in a conversation. But I believe we had one of two situations that if you were a bear, the first sell was here, and then I drew the second one up here for a couple of other reasons, and that would be the second opportunity for bears to sell. So it's funny, like this up and down is bullish, but the up is bearish. Okay. Look at all this. So this goes back a while, right? Double top, lower low, lower high, sell. Lower low, lower high, sell. We were supposed to work our way down here. It's kind of interesting how it all kind of panned out and then petered out right on this monthly pivot, which is bullish. Okay. Going back to the first of the month, and part of the reason why I drew this thing, but on the very first day of the month, you knew or should have known that this was a bearish price. So let's just redraw this the way that these guys are thinking about it. I'm going to leave that there. I'm going to kill this. Okay, and let's kind of do it this way. Okay, now that's very macro. You wouldn't have seen that on an hourly chart. Like there's smaller trade plans in here from, you know, end of last month, early this month, where there was an up and then a down, which you got, and then it failed and all that kind of stuff. But this more macro view fits into this this idea. The double top drop, right? Lower low predicts a lower high, right? Which predicts a lower low, which then predicts a lower high. Notice old support becomes resistance, right? Old support becomes resistance, so on and so forth. But we also knew on the first of the month right here that this was the best sell pivot that there was for the month. Doesn't mean it's going to fall. It just means that's exactly where a bear would have sold if they sold here and here. This is where they would sell now. Does that make sense? And if you're a bull, this is the place you would buy. Very definitional. It's not opinion. It's what these colored lines on my charts are telling me. That's what they are by definition. That's where a bull should buy. That's where a bear should sell. And the rest is just sort of, I guess it can't be history, but the future. The destiny, right? The rest is destiny. I don't know if this is going to go up to here, But everyone that bought it here has a target there. Anyone that is selling it now has a target down here. And you can see weeks ago I drew an X here because of this. So we had already planned the lower low, lower high, right? But we did that back at the end of July. So now it's the middle of August, and we're hoping for the same thing. And maybe it's just because bulls were, I don't know, aggressive enough to buy it. They weren't aggressive enough to buy it here, but that wasn't the pivot. The pivot was here, and that's where they're supposed to buy. So somebody bought it. It's not that radical. So I don't know who's going to win this, but if you bought it here, well, you could move your stop to break even. If you sold here, well, you're still nervous about it, but hopefully you get this back around, right? And somebody might win this. Eurodollar just blown the doors off this thing. So we were sideways on this a very long time. Waiting for a break, waiting for a break, waiting for a break. Right? And I believe we had a trade plan of trying to get this further down, but only to this level. So we blew out the monthly pivots, which isn't surprising in August because nothing happened in July. But we blew through the weekly pivots. And then next week's pivots, because of this such a wide range, then next week's pivots are going to be wide. So don't be shocked. Maybe write this down. Don't be shocked if next week or maybe even this week, I guess you could argue, that we go through an S1R1 range. It's called an inside week. And so S this week is 1317. So don't be shocked if we get one more move down and then people say, oh my gosh, it's Friday or Thursday. Sorry, is it Tuesday today? Didn't even say it. It's only Tuesday, isn't it? Let's see. Yeah, it's only Tuesday. So don't be shocked if we get down here, it's Wednesday, and it works its way back, and the top of the week is here. And we don't quite hit our targets. Okay? Okay, again, the pivots will widen. And so even though you might have a normal weekly range, it'll be an inside week, so S1R1. So now what if it continues down, you say? Well, you can see by this chart, you shouldn't be on the hourly. If you're still a bear, you should be on the 4-hour chart. And what should you be looking for on the 4-hour chart? Anybody? $21. Thank you. Okay? That means if you are a bear, not only will this plan work for you, but because you're a bear, you're not expecting a reversal. You expect to hit targets. I'm Mike D and I get respect. You cash in your jewelry and pips are what I expect, right? So anyways, you expect this to drop. Now the other thing to really pay attention to is you're not actually going to touch the 21 EMA. It's a moving target and it lags. So you want to cut corners. Okay. So in this case, even though typically you would expect a 55 to double bottom, what it's probably telling you here is it probably will on this time frame double bottom, but then still break. Okay. It's a fancy way of saying if you intend to short at the 4-hour 21, it's probably happening now. So imagine 6 candles from now, we are lower than where we are at this moment. So we're down here. 6 candles. Well, in 6 candles, this will move to the right. 6 candles. So 1, 2, 3, 4, 5, right? So 1, 2, 3, 4. So the moving average will be somewhere around here. But it'll also be lower because the candles are falling. So, okay, we'd be here, for example, but it's the whole average is going to drop. So this is going to move down. 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 What I'm trying to get to or get at is it'll look like this in 6 candles. And you'll say to yourself, why didn't I sell the 4-hour 21? Well, what you don't see is we're touching the 4-hour 21 now in the future. I would argue this is touching the 4-hour 21. And you're looking at it, you're like, there's no way. But in 1 candle, this will fall a little bit. In 2 candles, it'll fall a little bit. 3 candles, it'll fall a little bit. 4 little candles. And all of a sudden, boom, we're on it. So every hunter knows that when you're shooting at a running gazelle, you aim in front of the gazelle. If you aimed at the gazelle, by the time the bullet got there, the gazelle is gone. Same thing. So you gotta, if you're looking for the down, 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 up, up, you gotta find a reason to sell this before the touch, even though the whole trade plan is based on the touch. So that's what I did is I said, well, why don't we put 400% more data on this chart? And then you would use that as your moving average. Okay. Or the 200 EMA. Right? Does that make sense? The 200 EMA on the 15-minute chart is the 21 EMA on the 4-hour chart. Right? Everybody got that? So anyways, that should be your plan. Yeah. Yeah, so you'll find there's ratios on my chart. The way that I have it set up in multiple time frames, there are important ratios. This goes back, I'm not saying it's going to go up. I'm saying if you think it's going to go up, there are 2 levels of support in which you want to consider buying. There's this one, and then there's this one. Okay? Well, we've been stuck in this price now for what, a month? Yeah, solid month. All right? Bears, well, the monthly bearishness should have been here or here. So if you're a bear just selling now, not really a good time. If you've already sold these and you're a bear, then you're thinking, oh yeah, kind of the price we're at now is a pretty good sell zone. Don't you think? That's a great sell zone, isn't it? If you happen to already be a bear, if you already sold there and you already sold there, you know it can't make a higher high than this high. We're certainly not that high, so you know it can't make a higher high, so then it must be in a turn zone now. So you drop into a 15-minute chart and you look for a good reason to sell. Let me adjust this a little bit. Okay. The disappointing part if you're a bear is you probably sold this on Friday and made money already. You just thought you'd make more money, and now you gave all that away. So that's troublesome trucks for you. But you're thinking between where we are now, which is 67.5 and 68, you're going to look to sell. Capiche? I think if you're a bull, the next move also for you would be like, so you got this, which is really kind. Then the drop, and then the buy. It's basically the same price, but less risk. And a bull would be trying for this, okay? Now, consequently, a bear is thinking the same thing. They would like this to go up to 68 and drop. The difference is they're not going to be a buyer at 67.5. They're going to be a seller at 68, targeting, 60. Or actually 64.5. So, okay. So there will be sellers here. We just don't know if there's enough buyers here to overwhelm these guys, or if we've printed a bottom to the market. There's obviously room for it to go further down, but this is quite plausible if the market has found a bottom. And remember, we talked about this area being a bottom a month ago, so it could be. That could be it. That could be the turning point. Are we looking for a turning point in the market where everything that used to be down is up and everything that up is now down, and cats decided they don't want to live with dogs anymore? Mm-hmm. And if so, when did we estimate a turning point to occur on the calendar? Back in, let's say, January of 2018. It's August. So when did we expect it? Was it sometime at the end of January? Was it sometime in March? Was it sometime in June? Was it July? When were we expecting, potentially, somewhere around what period of time would we expect a reversal of the market? Yeah, Joe says third week of August. Well, when is that? Sort of this week, next week kind of period, right? So that could be, we don't know. I might be making a mountain out of a molehill. We don't know now. But in a month and a half, when oil's at 80, I might remind you that we were at 65. No, the answer is not September. Yes. The answer is the third week of August. That's what we said. January, the first week of January, probably the fourth day of January. January 4th, 2018. Yeah. So we don't know if that's going to work, but we'll find out. And by the way, hey, thanks, since we're on YouTube, thanks for the thumbs up. That's important to YouTube, so I appreciate that. And if you haven't done so, I think everyone here has, but just in case, if you haven't done so, subscribe to the Forex.Today YouTube page. You just click on it, subscribe, done, right? But what it does is when I do these YouTube live webinars, you're notified. You get a little ping, and it brings you directly to the webinar. So not intrusive, super easy to do. So make sure you do that. So that would be a good global macroeconomic sign that oil printed a bottom at 65, and we're on our way to 85 maybe. Okay. This 72 level is what we predicted back in June 2017. It took us a year, so we went from 42 to 72. And that was predicted. And then we knew this was a buy, we knew that was a buy, we knew that was a buy, we knew that was a buy, so on and so forth. Now we're here, and we have to kind of start all of this over. And I wouldn't expect as big of a move, and nor would we have as straight of a move, or we wouldn't have the velocity of this move, because remember, we at some point still were concerned about global macroeconomics here, and then especially down here, but this one here, the United States was improving marginally, or well, significantly, but still had a long ways to go to get healthy, and the rest of the world was still choking on its own blood. So, you know, we had many central banks doing extraordinary monetary policy measures to improve the global economy, and this is the consequence of that. Okay, asset prices going up. Asset prices being stock market prices, meaning real estate prices, and meaning commodity prices. Those are the three asset classes that go up when $7 trillion is printed out and given away for free. Mike, yeah, but you wouldn't call daily a seasonality thing, but I call that just human nature. Mike has brought up seasonality in conjunction with sort of the process of a day, which seems similar, but you know, you wouldn't call a day a season. But yes, this idea of when traders are trading, volatility increases, and when traders are not trading, volatility decreases. So yeah, a week ago when I said you should probably consider buying VIX futures because it's obviously going to go up, and then 48 hours later it had skyrocketed. It's not that I'm a genius. It's not that I had a crystal ball. It's not that a little birdie whispered in my ear saying, you know, Blue Horseshoe loves VIX. We knew it's sometime soon traders would return to the market. We didn't know when. We kind of guessed why at the end of holidays, but you know, there was something a little different. It was worry about European bank exposure to Turkey, but whatever, there was going to be something. And it was simply that traders would trade again. And we guessed that the reason volatility was so low is traders were not trading. Well, why are they not trading? Is there something wrong with the market? No, people went on vacation with their families. I mean, it's just all of a sudden common sense, right? So, yeah, if, let's say, 80% of the market is the London session, let's say from 3 o'clock in the morning New York time to noon New York time. Let's say that's 80% of the market. You're going to get less volatility in other periods than those hours, right? 7 o'clock New York time, 7 p.m., will have significantly less volatility than 7 a.m. New York time, because 7 a.m. New York time is approximately London lunch. And that's the middle of the trading day, and 80% of the market's going to be around, and volatility should be high versus at the end of the day when all the London boys are fast asleep. Just don't have to be a rocket surgeon, right? Cool. Gold. Now, I believe several days ago, was it 2 days ago maybe? 2 or 3 days ago, we discussed this, which is gold, the way that it's set up on the pivots, and we specifically discussed using the 21.55, specifically the 21, however, as the dynamic level of resistance for selling. I hope someone here can concur. The target is here, so there should be, doesn't have to be, but there should be a little drop, one more little drop, but you know what? That could be close enough. So once again, we don't really know, but if you were hell-bent as a gold trader to trade this to the actual target, not like only 99.4% of the way, you just have to get it all the way, then that's that. Now the actual conservative target is this. Well, you can see we basically hit it, but the aggressive target is there. So there might be one more trip right here. That's the 4 hour. Dropping into the 21, you have your strategy set now, so you're looking for tactical entries. Does this look like a short? No, but you're kind of in a short zone. You got to look left, drag it across to the right. Okay, so that's price action short. Then you do a fib. I guess you'd fib from there short. And then you'd look for a psych short. Where's the psych short? 1200? So you would have to assume we're not going to do go beyond a 786. So anywhere in this area and anywhere in that area, right, should be a sell. Okay. Zooming in on the hourly 21. If I was hell bent, like I was very aggressive, very confident bear on gold, and I believe we're going to go one more trip down and actually nail the target, then I would be very interested in selling right now, like right now. So I would drop into a 5-minute chart at this point. And I know the price, I know the time, I got everything. I want to do it now, I want to do it now, I want to do it now. And then, I start seeing red candles and suddenly it becomes believable. Cool. And again, thank you for the thumbs up. Half of you have given a thumbs up. I appreciate that. Let's do Piggy. And I think we're done with Piggy, aren't we? I think I left you with, you shouldn't sell it. It's done. And maybe if you're a cheeky monkey, you start looking to buy it, to counter trend it. But I don't like counter trending. So like selling here was obvious, selling here was obvious, right? How do you like them apples now that we're down here? Well, what should I be doing now? Is it obvious? No. No, it's not. We're done. On this day, we said this price. On this day, we said this price. And probably some of these other days, we said this price. Now that we've hit the price, I don't know. I don't know. I don't know. Okay? Could you go long? I think eventually we will. But as I've always said, picking bottoms is a strategy that on the long run stinks. Now think of it, picking bottoms. You got it? So I will let this reverse before I would seriously become a bull. And I got time for that. I don't have to be aggressive on this. Oh, Eternal Soul says, going back to this, 12.4, 12.5. It doesn't matter to me. I mean, it's the same thing. So 12.5? No. So look, your brilliant other analyst is just doing this, dude. Like, it's elementary. Yeah, sure. Okay, great. So I would sell here, here, or here. But, I mean, that is, simpleton. Sure, sure. That probably won't happen today, but yeah, why not if you're a bear? All right. Guess I got to go out a little longer. Okay. So is anyone thinking about turning this market around this week or next week? We're pretty close to a turn zone on pound yen. How about this one? Right? When do you think about it? And then when do you do it? Are these bounces good enough? Right on, Bastar. Yeah, you know, the problem with patience and discipline is it takes a long time. Not just to earn it, but to get it. So you kind of have to be beaten up a few times. You kind of have to go through Fight Club a few times. And then you have an aha moment. So turn zone where? That's the interesting part. I'm not saying where, I'm saying when. So I'm trying to help you guys work on strategy because so many of you still appear to be primarily tactical and have no strategy, which is dangerous, right? So we just talked about anticipating a turn in the market, maybe. Only anticipating, only a hypothesis. But I said back in the January 4th, 2018, that somewhere around the third week of August, the market might turn. In fact, not just might, will probably turn. But I don't know if it could be the third week of July, but that would be unusual. It could be the third week of September, and that's typically late. So we'll go back to just this simple hypothesis. My stupid, imbiotic, imbecile, childlike hypotheses, guess, even roll of the dice, shot in the dark, eyes closed, dart to the wall, says the third week of August, everything is going to change. So when we get into that period, now we're only like 3 trading days away from that week, right? So it could possibly be now. And in fact, I'm just going to look up at the calendar. Is it actually the third week? Some would argue we are in the third week. The first was on a Wednesday. The 8th was on a Wednesday. That's the second week. Okay, tomorrow's the 15th. That's the third Wednesday of the month. You see what I mean? Like, some would argue we're in the third week. This is the third week. This is the week on January 4th that we said we should see a turning point. So going back to, like, someone said, turn zone where? No, I'm talking turn zone when. We said maybe this particular week we get a complete reversal. And in particular, if you know me, I'm thinking yens. Is this it? Well, first of all, randomly picking out the third week of August, 8 months in advance. Is that technical analysis? No. Okay. So that's fundamental. So how do we prove or deny, confirm or reject the guess? Well, that would be technical analysis. Cool. Okay. Now here's the cool thing. If this is it, we will have many other opportunities to buy dips. It'll probably go up significantly. It'll probably come down significantly because not everyone's on the clue train right off the bat. And then off it goes again, right? Higher lows and higher highs, and it all comes together, right? By the way, did we hit the weekly target on the first day of the week? Yes. And that offers you a counter trend trade. So it reversed right where it's supposed to. So it's not all randomness. And it's not all, so anyways, there's just maybe something going on here. We don't know. And it's not a where, it's a when. We were talking about a reversal at a time, not a price. So now, what about confirming it now? Higher highs and higher lows and higher lows. But here's the problem. Most people miss these things, and then it'll move. Like, how about the pound dollar trade, right? It dropped 1,700 pips, and a lot of people didn't even notice it. So if you miss these things, and we did talk about this, I think, back in May, I said, look, if you missed a lot of these trades, a lot of these big moves, ask yourself why, and what are you going to do to avoid that same situation? Because the reason people tend to miss them is there's a lull and they get complacent and lethargic, and then it's happening, but they've been half asleep for 3-4 weeks, And all of a sudden 3-4 weeks of good trading goes by and they've missed it. Also, you get so, without fundamentals, you get so caught up in the down, 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 that you think it's going to keep falling down forever. So you sell, 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 and then you just give all your profits back. So now you're like, oh, I guess it's going up now. So then you're like, buy, 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 and lost a whole bunch of money. So now you're like, I guess it's falling. The yens are strong. Everyone's freaking out about Turkey. So you sell, 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 sell. And you find you're like always on the wrong side, right? So we have to be forward looking. And with some skill and some experience, you can throw the die. You can do the crystal ball, madam, whoever tells you your fortune and your future. You can do that for yourself and say, well, typically something around now happens, so I can start guessing what that would be, and then start confirming or denying your guesses. By guess, I mean bias or strategy. You can confirm or deny that using technical analysis. Right? No. So, so the question is now the question is direction. Okay, so let's get off Swissy because it's not the best pair for that to answer that question. But I don't know. Is there Euro up here or Kiwi? I mean, I guess we can try just Kiwi. Okay. Okay, is this a good place to start selling? Okay, answer is no. And what happened the third week of last year? Okay, the third week of last year, we said, hey, wait, no, I got that one. That's 2 years ago. Okay, there we go. Okay, all right. The third week of August last year, the third week of August the year before, I think we can squeeze one more in there, can't we? Just barely. Oh, I can get rid of the thing to the right. August, that's the third week of August there. Insert. That's the 7th. 17th. That's about right. All right. Insert shapes, ellipse. All right. So last year about this time, or exactly this time, it went up. I know it only went up for 3 months. I'm sorry. You see, it peaked out in November, maybe October. All right, so 2 months, sorry. Sorry, it only went up straight up for 2 months. The year before, it went up till the very end of the year. And the year before that, in 2015, it went up to the end of the year. So 3.5 months up, 3.5 months up, only 2 months up. So you tell me, what should we be planning now? Buying or selling? I don't know. That's for you to decide. That's what technical analysis is, right? But it's not hard to do historical analysis, right? That didn't take long. That was what, 2 minutes? I'm sure when I ask you guys to do long-term technical analysis to come up with a bias, I'm sure you go back and look at what happened at this time and place last year, the year before, and the year before that. If it takes 2 minutes of analysis, I'm sure you do that on a regular basis. So now we're at monthly support. Question is, do we go from monthly support 2 up until December? That's the rest of August, all of September, all of October, all of November, all of December. That's a heck of a rally. Is that going to happen? I don't know. I really don't know. But we did talk about it the first week of January. Right? Which just reminds me, I got to send out that email, I suppose, to start the swing trading group. We should probably do that. I should do that now. I should do that today. So I hope everyone that wants to be a part of that has completed the swing trading course. But yeah, hopefully this is the beginning of a good second half. Every year, I hope. Some years are better than others. 71, 71, 71. Yeah, why not? That's pretty far down though, huh? Were you trying to catch S3? Let me just quickly look. Yeah, so S3. Sure. I don't make a habit of waiting for S3. But anyways, well, I guess that's good. So thank you very much for your time today and your patience. I will be here tomorrow. It's only Tuesday, so I'll be here Wednesday, and I'll be here Thursday, and I'll be here Friday. Peace on earth. May the pips be with you. May our profits be above average. Thank you for the likes. Will you please also leave a comment? Just say hi or thank you or something in the on the YouTube page, not in the chat, on the YouTube page under the comments. Intense, great session. Thanks, Mike. Yeah, well, put that down in the comment area. I like that one. Intense, great session. Cool. Well, I care for you guys. I really do. You're like my friends. I've known some of you for 10 years, even more, which is just amazing. I was hanging out with Daniel in Hong Kong. Apparently, it was a year ago. Really, it's just like really. It's amazing how time flies. Gary, I'm not sure yet, Gary. Depends if Click Meeting gets their act together or not. I do like YouTube, and I think it gets bogged down because I'm running the webinar room in the background as well for those that were invited into that. So I think we can improve the experience on YouTube. But Friday was awesome too. What happened on Friday? Very helpful. Jean-Guy Boucher. No, Hassan. No, like I said, that's going to take a bit. You know, I am trying to come up with a plan B if that just gets too complicated. But I won't let you down. Yeah, me too. All right, guys. So peace on earth. May the pips be with you. May our profits be above average. Like I said, please leave a comment down below on the YouTube page. Down below on the YouTube page. And I will see you tomorrow. Cheers. Oh, yeah, just in case we do the video, we do the webinar on YouTube live tomorrow as well, make sure you subscribe, because when I click stream, when I click the button that says stream, all of a sudden my phone goes bing, and I'm notified instantly that there's a webinar because I subscribed. So make sure you take a 2 seconds and subscribe before you leave for the day, okay?